Just a bit from now, we'll be going to Anand Rathi Wealth. The stock, remember, is a little bit lower, though they went ahead and, they increased their guidance. In fact, those numbers were quite good. The company saw a double-digit AUM growth on a sequential basis and also has raised their FY24 guidance by around 8.5%. Joining us to help us out with how was the past quarter, what's the way ahead, Feroz Aziz, the Deputy CEO of the company. Hi, Feroz. Always good to see you in, Feroz. Give us a couple of details first up. If you could tell us what were the MLD issuances in the past quarter. Could you give us some clarity?
Yes, Nigel, the MLD issuances on a gross basis work out to be about 450 crores a month, including secondaries.
All right. And of the 1,600 crore plus inflow that you got this time around, how much was, towards MLD? How much of that was towards equity and how much was that towards debt?
Wonderful. Mangalam, good morning again. So from a net mobilization standpoint, the number for the full half year, stands at about 2,400 odd and about 1,250 odd for the quarter. That's point one. Point two, the net mobilization on mutual fund side is about 1,870 crores for the half year, as against close to about 1,400 the previous year full half. So point I'm trying to make is 1,870 odd crores out of the 2,400 for the half year came into equity mutual funds. And the industry overall on a lump sum basis lost about 30,000 crores. In spite of the SIP number of about 16,000 crores for the full year average, which is 90,000 crores minus 30,000 crores of lump sum going out. 60,000 crores was the industry number, and our number on the equity mutual fund side was about 1,870. The rest of it largely was net mobilization from structured products.
Right.
Okay, all right. Feroz, give us some more details then. What was the client addition, if you could tell us, in the past quarter? How do you see that run rate moving up?
So we generally add about 110 families net every month, which is about 300, 340 kind of number for the full quarter. In the full year, we've moved from 7,900 to about 9,220, which is the number we have currently, and we wish to end in the 5-digit number in this financial year.
All right. You've upped your guidance for the revenues as well as your AUM guidance as well. You did say that a large part of the AUM guidance also comes in from what the market is at that point in time, basis that. Just wanted to understand what happens to your net profit guidance as well. Do we see a concomitant increase out there as well? Because first half of this year, you've already got about 56% of your net profit guidance.
Yes, Mangalam, with God's grace, we've got to 111. We had said 205 for the year. Of course, 111 in the first 6 months implies that we should at least up our guidance to 220, which we have done. Again, we have this principle of being conservative and not having the principle of committing something and under-delivering. So 220 is our revised guidance from 205, which implies greater than a 32% growth for the full year as well.
Also, give us a sense about market sentiment, Feroz. That's broadly for the industry on the whole, not just for you. How are you seeing flows, interest levels as well? I mean, you would have been part of the institution for so long. Highest ever?
Yes, the interest levels are brilliant, Nigel. Of course, if you look at Indian household savings are about 670 lakh crore. That's the RBI data, give or take a few lakh crores here and there. 670 lakh crore. Unfortunately or fortunately, we just did about 4% on equity mutual funds, which is telling us what kind of road ahead we have. Just 4%. In fact, Indian households have more money in currency in the form of savings account, currency and current accounts than in equity mutual funds. And there seems to be a paradigm shift in the thought process. The financialization, which we've been speaking for several years, I think is ahead of us, and we've still not scratched the surface. So that's point one. Now getting into the sentiment of it, of course, whenever sentiments have been a little uncertain, we have seen that the net mobilization becomes better for Anand Rathi Wealth because investors find it very safe in our fold. That's why net mobilizations last year, same quarter also were very good in spite of the inflation numbers and Nifty having touched 15,300, 400 in the last year, same quarter. So that's point 2. Point 3, when we're looking at 9,200 families, we meet them close to at least 10 times a year. You are able to influence their thought process, and we bring in investors, only those who have long-term thought process, because equity is going to fall 10-15% from peak to trough every single year, and that's what it has shown out of the 22 years of this century. So most often than not, we counsel the person to be prepared for equity before we bring him into equity. So there are long-term assets. That's why we've reached 23,000 crores of equity mutual fund, all under distribution with us, and we plan to have a 3 to 4% market share of the entire Indian mutual fund industry over the next 4 to 5 years, and we are doing all our professional best to achieve that number, which we've been speaking about over the last couple of quarters.
We wish you good luck to go ahead and achieve that target, and why just achieve it, maybe surpass it as well. But the final question from my end, Firoz, is that you said you are meeting families at least 10 times a year and trying to convince them to stay invested for the long term, etc. A lot of people do not want to meet face to face, perhaps look at digital investing as well. And you've had products out there. You have the digital wealth and Omni Financial Advisors verticals too. Could you give us a sense of what proportion of your current income which is generated comes in from these verticals, and what rate is this growing at? What's your aspiration here?
Yes, Manglam. So I'll break this into 2 parts. Of course, you've asked me a pointed question, but I would like to break it into 2 parts. When it comes to startup businesses, which are 2 subsidiaries, which are technology-driven, digital, and the OFA, which is Omni Financial Advisor, which is a SaaS platform. Both of these are bootstrapped. They don't make losses, they make profits, but those profits are smaller proportions. Where this will lead us to is something which will unfold, and we don't like to count our chickens before they hatch. That's the principle there, and we're doing our best to make sure that the digital piece gives mass affluent the advice which an HNI can get, because it's chicken and egg story. If to become an HNI, you need great advice. To get great advice, if you need to be an HNI, then how is that going to happen? So what we do is we're trying our best to get the mass affluent to get the advice which an HNI gets, so that it propels them to become HNIs, and that would be our service using the digital platform. And I would not want to commit anything on its future, because in that kind of a business, agility and time only unfolds the future prospects. That's point 1. Now, why on this technology topic, I was wanting to break this down into 2. In the private wealth business, technology has helped us immensely because now 65% of our meetings happens on Zoom. That has brought in efficiency post-COVID, and we've been very, very clear in terms of processes of making sure that every 3rd meeting could be a physical meeting. That's making our relationship manager fraternity far more efficient, and the full cascading effect of this will unfold in the next 3 years. That, of course, got propelled by COVID, of course, the collateral damage which COVID brought in with itself. But I think that's one thing which we really look forward to.
All right, Firoz, thank you so much for joining in, giving us your outlook on the business, raising your guidance as well, and targeting 3 to 4% of the mutual fund market share over the next couple of years as well. Thank you for joining in. Wish you well. But